Welcome to Subramani. Um should I invest now when markets are at an all-time high? This is a question which has been asked to me so often that I'm going to find it very difficult answering it because it's not a straightforward answer. If you see most of the time, say 70% of the times of your investment, the market is going to be up. So if you take last 8 years, we have not seen a reasonable fall in the market, right? Even though it had this COVID period, the fall was only for 2-3 months in 2020. So if you take 7-8 years, the market has not significantly fallen, and even if it has fallen, it has recovered so quickly that people have a theory that when the market is down, you should be investing more. So with a vengeance, people are investing and the market is going up again. Now the question to ask is, after the market hits an all-time high, does it keep on hitting all-time high or does it fall? Because one very clear thing is, market has gone up too high, it cannot sustain, so therefore market has to fall. This is a wrong conclusion. Has the market gone up high? Yes. Is the market going to stay there? I don't know, but the question is, market could go higher. So if the market could go higher, then the question is, should you be buying or should you be selling? Are you able to say today the Sensex is 72,000 odd and it will then go down because 72,000 is a big number? No, that is wrong. 72,000 is just a number. So it would go to 75 and then come back to 65. That is also possible. But it is also possible that it goes from 72 to 75 to 78 to 82 and then comes back to 77. So if you have sold today, or if you are refusing to buy today because the market is going to go down, because the market has already gone up, you might be wrong, and you might be wrong by a mile. So what could happen is, the worst case scenario, you sell when the market is at say 72,000 on the Sensex, and then the market goes up to 75, 77, 80, 82, and then you panic and say, oh my god, I was wrong, and you buy at 82 and the market comes down to 77, right? So all these possibilities exist. So how should you tackle this? Now when I say, people ask me this question, the question is not so clear, right? They are not saying market has fallen, should I buy the index? Right? Or market has gone up, so should I stop doing my SIP? These are not the questions which people ask. People say, Pharma is doing very well last 1 year, so is it time for me to sell Pharma and buy something else? That is a more difficult question, because let us say Pharma has done nothing for 5 years, and then suddenly it goes up 20%. Now if you divide 20 by 6, it's only 3% up if you take a 6-year period. People don't do that. People say, oh my god, it has gone up too fast, right? But it could be compensating for doing nothing over the last 3-4 years. Similarly, some industry or some sector or some particular company, when it goes up, you have to see the long term, how it has performed, short term, how it has performed, how is the company being perceived today. For example, not very long back, but maybe late 90s, Apollo Hospital used to be available at 9 rupees and it used to pay 10% dividend, which means you had a dividend yield of about more than 10%, 11% dividend yield. Now it's ridiculous to find that the share price was at that such a bottom price. Then it kept on going up. Then people said, oh, everybody needs a doctor, so the hospital revenues will only go up. Then it went to 130, 140, 1000. Then people started looking at it like they would look at an FMCG or as a hotel stock, saying, okay, the supply is limited, people have no choice, people come under duress or whatever, but people are willing to spend money. Unlike a hotel industry where people come by choice and spend money, here people come compulsorily, they cry, it hurts them financially, but they may sell their house, they may sell their land, but they still pay the medical bills, right? Collection is extremely high, so there are no bad debts, etc. So should you be buying Apollo Hospital? Oh no, what has happened is it's already reached 4,000, 5,000, whatever, and now the government is saying they will put a ceiling on how much you can charge. None of this ceiling ever works, right? So the question is, should you be buying Apollo Hospital? That is a difficult question. Should you be investing money in the hospital industry? please go and look at the PE. Is it worth investing in this PE? Is it comparative? No, I mean, is it competitive to other industries? Is it competitive to other companies in the same industry, right? There is Max, there is Fortis. Are these comparable, or is their capacity much too small so you can't compare it to Apollo? It's all difficult to say. So therefore, one thing which I have realized is that if you have a reasonably well structured portfolio which is well balanced, you have debt, you have equity, maybe you have real estate through REITs, right? So if you have that combination and you don't require money for 7, 8, 10 years, it's a great time to be investing constantly without worrying too much about what the market will do. So my SIP in small cap fund continues, my SIP in a micro cap index continues. I have not stopped any of that because I know that the best thing to do to earn money is to sit tight during drawdowns. When the market falls, you have to sit tight. When the markets are high, you keep investing, maybe lesser amount, but you keep investing. You cannot say, oh, I will withdraw the money and I will enter the money when I will enter with my money when the market goes up. It's almost impossible to catch the top and the bottom. You keep investing. That's what I've been doing. I am not sold. I did not sell during a COVID crisis. That was useful because withdrawing during bad times is one of the worst things you can do to your portfolio. So again, coming back to the question, the markets are at an all-time high, but it's never that the market is at an all-time high. You will have a market which is doing very well, and you will also have Asian Paints, HDFC Bank, Kotak Bank, maybe even HUL not giving any great returns in the last 6 months, 8 months, maybe 2 years, 3 years. So maybe it's a good time to be buying that, but specifically which share, that's far more difficult to say. So best in such cases where you're moving just because of the sentiment, index makes more sense, because index will reach a particular level, then if it does come down, you can keep averaging because you know one day it will go back again. Whereas with companies, you do not know whether it will go back to that level at all, and even if it does go, when it will go. So for individual stocks, whether to buy at top is more difficult to say, especially because with the individual stocks, people tend to buy all that they can as soon as they hear, right? If I tell you that XYZ company is good at 700, everybody thinks they have to buy at 700, and they will think at 800 or 900 it is overpriced, and because you anchored on 700, even 600 looks very cheap. Oh my god, it's come down, let me buy more, right? That's what happens. So whether to buy at new highs is very clearly a psychological question more than a financial question, because even if I were to tell you this is a fantastic time to be buying, the market rally has just started, after that it is going to double, triple, whatever. The question is, how do you process that? Do you want to still buy, or does it still scare you, right? You could be scared saying, no, I don't want to buy, so I will stay out of the market. Perfectly right. You could be right after 2 years. You could be right after 5 years. So both things are possible. But if for 5 years you take a view that I will not invest in equities, good chance that you're not creating wealth. You might actually be losing money because of this one single decision. So don't worry too much about what the market is doing. Market does what it has to do. You should be worried about when you need the money. If you need the money in 3 months, obviously that has to be in cash account. If you need the money in 10 years, obviously that money has to be in equity. Thank you.